Hello, I'm Dr. Weber, and I'm going to try my best to help you to understand what is going on with this college accounting. And hopefully, we're going to be totally getting the whole big picture by the end of the term. Now, this textbook takes it a little easy on you on this first chapter, and they just give you like the overview of why do we even want to do accounting, and so why do we need to do accounting. And so, rather than having a lot of very technical concepts in this chapter, they have taken more of the background approach for chapter one. And so, starting with chapter two, we'll be hitting a lot of problems and understanding how accounting works. But for this chapter, there's not a lot of the actual processes in this chapter. And so what we're going to do is learn some background terminology and reasoning behind what we're doing. And then that means we have just small amount of homework. I think there's only one problem in your Cengage assignments this time. And after this, though, there'll be a lot more homework and there'll be a lot more need to actually practice doing what we're learning. So this one, what I'm going to do is run through the PowerPoint slides, and I really don't generally like PowerPoints very much, so I tend to ignore most of them and just use them as triggers because I feel like you can read what's on the PowerPoint, and a lot of it is the same thing that's in the textbook. So I need you to read the textbook. I need you to take a look at these PowerPoints and make sure that you understand what is included in them, and then I'm going to basically talk around them, but I use them as a trigger. So you'll see me just kind of jumping through the PowerPoint in places and just skipping some of them, but I'll just use them to try to make sure I'm inserting some concepts around what's presented in those PowerPoints. Okay, so the first chapter is the intro to accounting. And basically it is just trying to help us to learn what is the reason and purpose for accounting. And so we're going to just pace through these pretty quickly. The purpose for accounting is to provide this information about what's going on in the company so that when someone else looks at the financial statements, they'll understand better how the company's doing. And if there's trouble, it might help them to identify. There are different users of accounting information, and that includes both internal users and external users. Now, in a sole proprietorship or a single person company, the owner and the manager might be the same person, but in most companies, the owners are not necessarily the people that are running the company. So that's why I have them separated, owners and managers. But internal users are generally the managers and the board of directors if you had a corporation. So for a single owner company, the internal users would be the manager slash owner. And so basically the managers are using the information to see the big picture of how we're comparing to other periods of time and what are we presenting to outsiders that is this going to be favorable, what we're showing them, that sort of thing. So the managers generally don't use the financial statements as much as other outsiders do because they have a lot more detailed information about how much does it cost to make this thing and how many of them that we have to create, what's the sales market looking like. So there's a lot of management information that the managers are using to make decisions with. So mostly the financial statements that we're studying in this textbook and this course is intended for external users. So the internal user in this case would be always the managers, and then sometimes the owners, if the owners are active, participatory in the company. But otherwise, the users of the financial statement are the external users, which is going to be the owners that are not actively involved in the operations, and then also in other words, they're investors, and then also creditors, and maybe employees that are thinking about working for that company. They might be interested, or current employees, if they're trying to decide whether to stay with the company, they would look at the financial statements to get a broad picture of the direction the company's going. And then governmental agencies, because as we all know, governmental agencies are interested in getting their share of the company's profits in the form of taxes and fees. And so the governmental agencies are users of the external or external users of the financial statement information also. And then sometimes customers and suppliers are also external users. They didn't really mention that in this slide, but that is a very common use of the financials. Is an a supplier would review the financial statements, and a customer would review their financial statements many times to decide if they want to do business with the company. Okay, and then we're going to talk about the accounting process later on. When we start talking about the actual accounting work, we're going to be talking about the accounting cycle, and it's very closely aligned to this accounting process we're talking about here, where we're just gathering all the information so that we can make these reports that are needed to provide the information to the users. So the steps to the accounting process, basically, these are important that they happen in this very order, because you have to know what you're doing in order to record accounting work. And so it's very critical that you analyze the transaction. This is where you have an event that happens and you're trying to figure out exactly what just happened. And that you have to know that before you will know how to record it. So you analyze the transaction that just happened in the business, and there's thousands and thousands of them, of course. In every business, even small businesses, there's thousands, but way more than that in a large business. But you first start out, analyze what just happened. Then you record that transaction so that you can keep a record of it and have a history with it. Then you classify the different transactions and group common ones together. And so that's what we'll be learning how to do when we analyze a transaction. We make a journal entry later to record it. Then we classify it by posting it to a general ledger. And then we summarize it by pulling all the different accounts that we've posted to into a trial balance. So this recording the transactions and then classifying as to what kind of asset or liability they relate to, and then summarizing them, that's all part of our accounting cycle that we're going to be learning. So we're going to summarize what just happened because we recorded it, we classified it, then we summarized it, and then we're going to report it through our financial statements. And that's in our accounting process. That's in our accounting cycle. That's going to be where we do financial statements like income statements, balance sheets, and statement of equity, owner's equity. And so these reporting statements is where we just tell the result of what we compiled, what transactions happened, and when we put them all together, what was the result. And so reporting is very important, and a lot of this course is going to be talking about the impact those have. And then the last step in the accounting process is interpreting, and that is just looking at the financial statements and see what can you gain or glean from them. And so all this is really critical. It's really important that you learn the order that they go in. There's actually a little exercise in the in the back of the chapter, exercise 1-2. We could just, we're not going to work through it right now, but you could go to that and run through that exercise. It's just asking you to put them in order, but just making sure that you're able to do that. The exercise 1-2A is a sort of just order them. And then exercise 1-2B is asking you to match a description of each of these to a little small description term that ties in to explain what that step in the process is. So I would suggest that you do exercise 1-2A and 1-2B for that purpose. The homework is exercise 1-1B, I believe. And so we'll be talking about something that relates to that in a moment. The next objective we'll talk here a little bit about GAAP and FASB. GAAP is just a term that means generally accepted accounting practices, generally accepted accounting principles. And that just means the rules that we have to go by in order to prepare correct financial statements. They are issued by the Financial Accounting Standards Board, and that board is made up of a group of volunteers, basically, that come from the accounting profession, and the people on that board rotate in and out. They have a term that they serve on the board. And so it's kind of a dynamic that's ever changing. That board, depending on who is on the board, does a social interaction where they talk about well, how does this affect the accounting profession? Should we change something related to this topic or this other topic? So it's like an evolving process where the accounting rules change from time to time based on the consensus of thought on this board. And so to me, that's just kind of interesting. It's sort of like the sports activities. If you play basketball or football or one of those, you're going to see that the rules change at times. So years ago on basketball, the 3-point line was in a different place than it is now. And all the reason that happened is from a board similar to this accounting standards board, where the board that was in charge of the sport had a change in thought because the people serving on the board rotated to a different group of people. And so if you have a persuasive voice that is sitting on that board, then maybe a change might happen a little easier if you could convince the rest of the board that this would be better for the sport or this would be better for the accounting profession. Then you would wind up making that change. Okay, and so the next thing, just one second, sorry about that. Okay, and so the next thing to remember is sometimes when the rules get made, some people don't follow the rules, and that's not on the slide here, but there's a really important law that has been passed relating to keeping the rules and doing it the way it's supposed to be done, and that is the Sarbanes-Oxley Act. And so that is a congressional act that was put into place to control accountants, basically. And that's because there was a lot of lapses in the keeping the rules and going by generally accepted accounting principles. And a lot of accountants were not actually implementing the rules properly. And so some lapses happened that caused fraud to be able to be to happen. And we're not studying that in this class, but I'm sure some of your other classes, you will study the fraud cases. And then we might touch on it just a little bit in one chapter or two, but basically some people misrepresented the financial statements over the years. And whenever it came to the attention of Congress, they made a law that changed some of the rules so that they're more stringent, so that accountants have to go by a tighter rule set about how to prepare these not tax returns, these financial statements, so that when the public looks at them, they won't be deceived about where the company really stands and how well the company's performing. And so Sarbanes-Oxley is just an oversight and an accountability measure that was put into place by Congress to make accountants do their job more effectively. And so it's really important bill that they passed. Okay, now let me see if I can get this thing to be nice to me. Okay, so that's just how FASB, the process for FASB. I'm not going to go through all that. You can read through that, and the textbook talks about it a little further also. And then we have 3 types of businesses that they cover in this chapter. In this textbook, we're going to be using sole proprietorship mostly. In some accounting textbooks, they use the corporation mostly to talk about how to do accounting processes. And so either one is still teaching you accounting. But if you take another course in the future, it could be that instead of a sole proprietorship, they would talk about corporations. So just don't let that throw you where you think you don't know anything about accounting, because it works the same. There's very little differences, but there are a few differences between sole proprietorships and corporations, of course, but the accounting for it is largely the same. So just learn the differences if you go to another course where they talk about corporations instead. Okay, let's talk about the 3. We had on that sheet, I kind of skipped through that. 3 kinds was the sole proprietorship, which is single owner. Then the partnership, which is multiple owners, more than one, but still owning it, just owning a share of the company without an incorporation. And then corporations. So we'll talk about just a little bit about each one. The sole proprietorship, just one owner, and they are like totally responsible for everything. They make all the decisions, the buck stops here, the liabilities right there with them. And then partnerships, on the other hand, is 2 or more partners. And so it's like a sole proprietorship in that it is just them owning it individually, no other entities involved. And they share the risk, each depending on their ownership percentage. They would share responsibility and risk, but they don't all manage the company a lot of times. Like sometimes there's just one partner that manages, sometimes it's a joint effort. If they jointly manage, there's a potential for some major disagreements because, I mean, people are strong-willed, right? And so that is one of the downsides to partnerships, is that if they're trying to jointly manage, there's sometimes a struggle in that regard. Corporations, on the other hand, is where individuals buy a share of another entity that's called a corporation. And so the corporation is a legal person, it's a legal entity of its own that's considered to be a person. As in other words, if I own shares in a corporation, I'm not controlling that corporation. I'm just investing in it. And so the corporation has a life of its own outside of its owners. And it could be owned by many, many people, thousands even, or, could be owned by millions of people. But in any case, a lot of companies are owned by a large group of investors. And then, so those investors or stockholders have no risk, basically, other than their initial amount they paid for their stock. So if the company happens to lose a lot of money, the individual that owns the stock just stands to lose their original investment in the stock and no more. But then on the same token, they don't have any control over the business either. And so that's the downside, the no control. So you just have to have good managers in that case. Okay, so then there's different types of activities that different companies could have. And these companies, these types of businesses could operate as any of the forms of operation that we talked about, the sole proprietorship or the partnership or the corporation. But it's what do they do, the functions that they provide for their customers. So service business, where it would be no substantial goods or service, goods were provided, just services were provided mostly, like if you're a CPA or an architect, a doctor, or lawyer. Those are service companies. So what they do is, I'm a CPA. If I provide services for my customers, what I do, or clients as I call them, I provide them with a tax return, and I hand them a document that shows the tax return. But that document itself is not what I'm providing. It's the service of building their financial statement or their tax return. And so a service company generally does not sell goods. They could sell a little bit of something on the side, but mostly they don't. And then a merchandiser is a company that buys product from someone else and resells it to the end customer. So this would be like if you had a retail store. And so I'm sorry, probably going into the slides that are coming into the next 3 slides after this. But anyway, it's okay. Merchandiser, though, just buys from someone else, marks up the price, and then sells it to the end customer. And so if you go to the grocery store, most of the product you see there is not made by that company. It is purchased and then resold to you. And so that's a merchandiser. And then if you were the manufacturer, on the other hand, you would be the one making the goods and selling it to the merchandiser. Sometimes the manufacturer also has retail. So they're a combination of a merchandiser and a manufacturer, like Walmart. Their name brand products, the things they sell is great value. Those are some they manufactured, but then they also retail them or merchandise them. So the service business, no product. The merchandise business has a resale product, and the manufacturer has a product that they build. Okay, so what they said about service, they just gave some examples. Then for merchandisers, they're giving some examples of the type of merchandise businesses. And then for a manufacturer, again, giving some examples of the different types of things you can make. It's totally unlimited. Of course, you can, everything that you see that's in the store has been manufactured. And so it's vastly optional what you could make, anything you can dream, right? Okay, so the next thing we'll talk about is some career opportunities. And this textbook talks about a lot of different opportunities you could have. And it kind of goes in a progression of the kind of job and the kind of education you'd have to do it. Accounting clerks, and they give some examples of what clerks do. This is a job in the accounting field where you don't have to have a degree in accounting, but you can still have a good solid position in these companies, because a lot of companies need, well, every company needs accounting personnel, and every one of these functions that we are showing, it has a lot of opportunities at different types of companies you could work for. Accounting is one of those fields where you can get a job just about anywhere, and you can work in a field that you're interested in and still do accounting. And so accounting clerks don't require a degree usually, they require experience. So that usually an accounting clerk just gets lucky to get hired without experience. And then once they're there, they get the experience and they can move to a different company if they wanted, or they can progress up in that company into another job that maybe pays better or has better, just more interesting to them or whatever. But accounting clerks, that's some of the things they do there. And also it requires experience. Also, required experience would be bookkeepers and para accountants. These are non-degreed career opportunities in accounting, but they still have good solid wage. They have dependability, so really good jobs. But if you want to get a job as a per se accountant or get a CPA certificate, you need to get the accounting degree. But these are some jobs you could get just through experience. And so then if you want to go with the degreed accounting position, then that would be where you could actually do more like making the accounting system. You could analyze and interpret. And so you need a degree for this, but there's a lot of different areas where you could work once you do get a degree. So you could work in public accounting, which means you're working for many different companies. And so you're offering your services to multiple organizations, and you just help each one of them as their independent accountant. Or you could work in private accounting, where you work at one company and you help that company keep their accounting records correct. Or you could work for a governmental agency or a nonprofit organization, because all these people need accountants. They talk in a little more detail about what a public accounting could do. There's lots of focus areas you could work with, like auditing, taxation, management advisory, and forensics. Forensics is talking about the fraud. And then you could also get your CPA certificate, which helps you, lends credibility. Also the certified fraud examiner for the forensics accounting. And these are just ways to show that you are proficient in the areas of accounting that you want to work. Private accounting, the managerial side, this is the internal accounting records. And so this is really critical. There's a lot of accounting classes that you can take about managerial accounting, and there's a lot of jobs in managerial accounting. So this would be working for one company where you help them keep their records under control. You could work in accounting information systems. You could work in finance, cost, tax, because big corporations have departments for each of these things. So these are a lot of areas that are open to accounting. Budgeting, of course, is an accounting function, and internal auditing, where you check and see if the company is going to pass the audit when an external independent auditor comes and reviews your records. So it's a little testing. It's like it's like an advanced test to see if you're going to pass an audit. And then, of course, the controller is an important accounting function inside a corporation. So it's a private accounting position, and it's a very good paying position and a lot of responsibility as well. And so a lot of people get a certification related to that, for like a CMA or a CIA. There's also a CGMA. And so there's several different certifications you can get to indicate your proficiency in internal accounting, or also known as managerial accounting, or also known as private accounting. So many terms mean the same thing. Okay, and then the governmental, that, you know what that is, that's just talking about if you work for the IRS or you work for the state sales tax or the local sales tax offices. So a lot of those will hire accountants as well. And then if you could also work for a nonprofit organization like a school or a church, maybe a hospital, a lot of different opportunities there too. Now, the next couple of slides talk about the expected demand and the average wage for different jobs. Here's some job descriptions. I'm not going to go through there, but I think it's kind of cool how they show these salary ranges for each of these, which is interesting. So you can take some time and read through those. I find them interesting just because I work in accounting and I have a lot of students who get degrees in accounting and then they look for jobs. So these different positions, they just show what their wages are. Some of them are pretty nice wages, as you can see. But that's something you can work back through. All right, so now let me see. I got a few notes here about some other things I wanted to talk to you about. One thing I did want to work this exercise on page 1A, or I wanted to talk to you about it a little bit. It's exercise 1A. It's on page 19. And so basically they're asking you which of these match the following users with the information they need. And so they've got the owners as number one, and they want to know which of these descriptions describes what the owners want from the financial statements. And so the answer in this case would be D, that they want to know what the financial condition of the company is. And then the second one, the managers, what do they want? And so what they wanted was they want detailed, B, they want detailed, up-to-date information so they can plan for future operations. Then the next one, the creditors, what are they looking for? And when you look at the A through D choices, it's pretty clear which one the creditors want. They want to know whether you can pay your bills. So they want A. And then the government agencies, it's also pretty easy to see what they want. The government agencies want C. That's the financial information they want. They want to determine how much taxes should be paid and whether or not the regulations are met. So that's something I wanted to go through with you just a little bit. Let's see, what else have I got here? Just going to go back through my notes right quick to make sure I have touched on most of it. I think most of it I did, but I have one more thing here somewhere. Oh, the terms. On page 16 through 18, there's a boatload of terms, and they're really important. A lot of it we touched on. The textbook would have talked about these as you read through, but also you just need to make sure you know those terms. You know, when you see that name, you know what they're talking about. So study those terms. They're on page 16 through 18. You could use some note cards, or you could make a Quizlet. If you make a Quizlet, hey, just let me know. We can post it here in the class if you want to share it with your classmates, but just be aware, if you post a Quizlet, then you got to let somebody, if you got an error in there, someone else has to be able to say, hey, we need to fix this. But anyway, so if you make a Quizlet and you want to share it, I'll just open a forum in case you want to share tools like that. And so you can just post it there if you want to. And then if someone posts something, if there is an error in it, please just tell me, or not tell me, sorry, I messed it up. No, just reply to them and say, hey, fix this piece that was needing some help. Okay, no shame. If there's an error, it's okay. We'll just fix it. No big deal. Same thing with me. If you see something I said that was crazy, just email me. I will totally try to get it straight. And then let's see, what else do I have? No, I think that's pretty much all. And that takes care of chapter 1. It's going to be a little more involved in the future chapters, but for this chapter, I think that's going to take care of you. Okay, thanks.